right. So Disney just came out with earnings, and they're hitting that pretty hard. I mean, it's not completely awful. Also saw Baba in the news. That looks like that's getting a little bit of a gap up as well. Also, Cisco. That's up pretty good. They actually had a pretty good beat. Talk about a company that really has had problems. I mean, it's one of those stocks that I owned forever, didn't go anywhere. Ended up getting rid of it. And now, in the last 6 months or so, it's actually like back in flavor. Crazy. So, those are what I seen in the news. Looking at futures. Basically hit 50-50 yesterday. I had one loser and one winner, so I basically broke even on futures. As far as today, let's take a look and see where we are at. Let's see. Okay. Tight range today. If I'm looking for a spot, I'm still looking for yesterday's alert down here at 68.29.50. Today's S3 is 68.27.50. So I think that one's still in play for today for a possible long if we get down there. There is some data today, I think, at 8:30. There's quite a bit of data, actually. Right? Unemployment and all that kind of crap. Yeah, jobless claims, CPI, inflation, blah, 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 blah. Bill auction. But a bunch of other stuff that nobody cares about. Fed Hammock speaks. So that's going to be at 8:30. I'm sure that's going to move some stuff around for at least a little bit. Not going to fiddle in the middle. Still have this marked up here, which is yesterday's swing high, 69. And the last few days, 6,900. So there's still quite a bit of resistance up there. So we're going to mark that. We also have an R1 at 68.94.75, kind of like that for a possible short. Not going to fiddle in the middle here. I mean, S1 would be interesting if, in fact, it wasn't 7 o'clock in the morning and we didn't have data coming out at 8:30. So it's kind of sit on your hands the rest of the way until that data comes out and then see where we go. So those are kind of the spots that I'm looking at right now on the ES. So there's that. All right. And then getting down to a couple of things. don't really have anything. I don't know. It might take a look at Disney. I don't know if there's any there with Disney. It's kind of a dead stick. I mean, you look back. I mean, right? I mean, for this whole year. I mean, if you were able to catch it down here at 80, but after that, it has done absolutely nothing. I don't know if this is really even going to be any reason. I haven't even looked at it. I don't think there's much volatility in there either in Disney. 46 isn't bad. I don't know if you're really going to be able to do anything. It's down to 113. There's a lot of the juice is probably going to be gone out of these. And do I see Disney really making a run? I don't know. I don't think so. I don't really have any interest in it. I really don't. I can't force myself to be interested in Disney. I don't really give a shit about it. So let me talk about yesterday, right? I talked about Oklo. Let's talk about Oklo. Oklo. Yeah, good old Oklo. And then, looking back, this is only the second time that I've actually traded this. Traded it last year. I think it was last year in 2024 down here when it was in the 20s. And I didn't even realize, like, look, I when I do these trades, I don't really get emotionally involved with the company and what it does and all that stuff. I'm just trading it just on price action, volatility, all this other stuff, right? And so I didn't even realize that it's kind of like a meme stock. I mean, it really is. I mean, there's like no volume in it. I think it did while I was trading it, it opened up at like 2 million shares. And by the time I was done and out of it, it only got up to like 4 million shares. And I'm like, man, this thing's garbage. Like there's like it's a meme stock. Let's face it. It's kind of a meme stock. It is what it is. But needless to say, I wish I could say that I actually caught it right, but I didn't. I got run over in it yesterday. I did short the 115 calls yesterday in Oklo, the Novembers. The November 115s. I sold them around 9:45. I should have waited. I sold them at 9:45, and I want to say I think I sold them for like 550 or 560, and I ended up buying back at 8. Because it ran up, it got no volatility crush at all, and I ended up bailing out, and then I took a couple $100 loss, and then to top it off, it actually collapsed back down. I mean, it was pretty awesome actually. Typical trader problem, but hey, look, I took a shot and it didn't work. And, took a decent loss. I want to say it was like $200 or $300. Yeah, it's not going to ruin my day a little bit, but it didn't kill me. But needless to say, I should have waited, and it was funny because I kept watching it yesterday and I kept watching it, and I'm like, what the hell with this thing? Like, where's it going? There's no volume. There was no volume in it. And I'm like, this thing is just a freaking, and I'm like, I got caught in a goddamn meme stock. And I'm like, oh man. And I was so pissed at myself for that. I was like, man, I haven't gotten caught in one of these garbagey stocks like this in a while. And again, it's only a garbagey stock because I was on the wrong side for the day. So, of course it's a piece of garbage because of, if I was long, I'd be like, yeah, right. But I wasn't. So, but anyway, needless to say is, I literally traded this exact opposite. So I could have pulled a Kramer on myself and I would have been fine. So anyway, with that being said, I got in and out of it, and it did finally, back down. I'm still overall bearish in this, just looking from the pattern here, and how, and I think yesterday was maybe a bit of an anomaly. I don't know, who knows, right? What the hell do I know? But with that being said, I sold some other So when I did the 115s for a day trade, I did them naked. So I just sold the 115s naked, and I ended up buying back, took a loss. But what I did in another account is I actually did a spread. And I talked about, like, if you didn't have the capital, and I don't have the capital in this account, so I did a spread, and I did two of them. And I did two different buys, right, or sells. I sold it, I sold it around the same time I did the other calls that I took a loss in. And then when I seen it peak out, I sold another set. And so right now I'm short a 115, 125 call spread in November. It's down about $9 or so, but it's looking pretty good right now. So if this thing kind of stays where it is, or even just has a little bit of a pullback, and more importantly, if I can get this volatility to kind of collapse, and that didn't happen yesterday, which well, I have to get I'm no good without my pointer tool. I'm all about the pointer tool, man. I'm nothing. I am nothing. I'm garbage without my pointer tool. Because then I'm just another talking head. But I got to have my pointer tool. I'm waiting for this volatility to kind of come down. It's 55.2, and if you look at it on the chart, it hasn't really collapsed. I mean, it's collapsed a lot since its peak, which was around 80 and change. And now we're at 55, but it really hasn't, come in where I would expect. I would expect this thing to kind of be under 50 by now, at least, or at least where it normally is, where the average is, which is low 40s, and that has not happened. So there you have it with Oklo. So there it is, right, folks? Everything's not a winning trade like people perceive, right? Everybody doesn't have a 90% win rate. I mean, if you really think anybody's got a 90% win rate, you need to go seek a therapist, because there's nobody who has a 90% win rate. So anyway, you took a loss on that one. So I'm still short on this, and I still may actually add on to this short because of this volatility, right? I actually may go out further than November. I'm still kind of, I would like to see it level off here, or at least maybe get a little bit of pullback. And if this volatility kind of stays up here over 50 today, I'm likely to go out to December and sell a few more calls. And the calls that I was looking at were a little bit further out than where I'm at now. I'm in the 15s, but I'm looking at possibly even the 125 or the 130s. And if you look out here, these things are actually exploded in price. I mean, they're paying you like an enormous amount of money out here. I mean, here's the 130, here's the 135, and they're paying like $7, and here's the 140. I mean, so you can go all the way out. So I was thinking of somewhere between the 130s and 140s, preferably like to, depending on where this goes, I'd like to see it get a day where it kind of, maybe just kind of stabilizes here, and if volatility stays in, I'll go and sell either like a 135 or a 140. I kind of like the 135 because I'll get a little bit more money, and probably likely do a pretty wide one and do like a 135, 145, or even a 155. I kind of like the 135, 155, or, if I really want to be a player, I would do a ratio. The ratio trade for this, to me, is probably best. The only problem, again, I just really have to digest the fact that I'm going to use some juice here. This one's $2,200 buying power hit to do a ratio. I really don't know if I want to put that kind of capital to use in this kind of trade. But you can see here I got an 86% probability of profit. This one looks great on the curve, by the way. Hocklow. Hocklow. Thing about this one and looking great on the curve is that I have upside on this trade to be right almost near 150. So this thing would have to go up to 150 by the end of December for me to kind of, could it happen? Absolutely. Has it happened before? It certainly has. But I can manage this. Now, the other thing to this is that, too, you can butterfly this. And the way you butterfly this is basically, and the reason I would butterfly it is because if I cover this other end, I'm going to reduce this buying power out here. So when you hear people talking about butterfly trades, they're basically doing these, they usually don't do like a traditional butterfly where it's like 135, 140, 145. That's a more traditional butterfly. They're doing more of a wider butterfly. It's like they call it like a broken wing, and it's because that strike out here is so far wide. And the only reason why you're doing that is to reduce the buying power on the trade. So, and you're kind of, in a way, it's kind of trickery to the brokerage. So I would buy a 160. All right. And then if you look down here, just by sticking this option out here at 160, I've reduced my buying power by almost $1,200, $1,300. So I'm reducing my buying power a huge amount by adding that. And really it's more, and you're really not interested in this option other than it reducing your buying power. That's really all it is. And so when people talk about broken wing butterfly, that's really all it is. It's basically taking a ratio trade, which I had on, which is a 2-to-1. You sell 2, you buy 1, and then you're buying 1 even further out of the money, basically just to cover this. So this is technically a risk-defying trade, right? Because everything is covered. There's nothing naked. And it's basically 2 spreads, right? I basically have a 1 call spread here, and I have another call spread here, and I'm doing it all as 1 trade. But, technically speaking, it's a broken wing butterfly. And the reason it's a broken wing is because this is the broken wing here, right? If it's a traditional butterfly, it'd be like this, right? 135, 140, 145, right? Looks like a butterfly. Here's the head, and these are the wings, right? The head is the cells, and the buys are the wings. But you make it a broken wing, you pull this out. And the more broken the wing, right, the more the more profit you have potential to make, but the less amount of buying power you're going to reduce, right? So, as you can see here, this goes up as I move this. This buying power goes up as I move this out. And it eventually makes this thing worthless. Right, you can see at some point it becomes whether or not, it's at 2,500, I'm at 175. If I were to just get rid of it, buying power is 2282, so it's actually less. That's crazy, but again, it's all how they calculate the margins and all this other stuff. And I can actually do a whole nother session on, just buying power and how the margins are calculated and whatnot, and the software does it for me, so I would prefer to be stupid and just let it do it rather than really try and figure out what the hell it does. So anyway, there it is. So one of 2 things: either sell the calls, so if you have, again, it's all about money, right? If you have the money to put up, the ratio trade is the way to go in this, which is the 135, 140 out in December. And if you don't, broken wing butterfly isn't bad. That reduces the buying power by 1,000 or so, which is 135, 140. Good probability of profit, or just sell the 135. Just sell the 135. There you go, 135. And I would go 10 wide at least on this. Make it worth your while. The 135, 145. Right? Again, all of those, good probability of profit. You're all getting pretty significant negative delta. And all of them look good on it. So there's Oklo. That's kind of my... now, the other side of it is, like, look, if you're bullish on this, volatility's high, then by all means, sell puts and do the same thing, but just do it on the other side, right? I showed you how to do it on the call side because I'm generally, bearish, skewing bearish, right? If you notice, all my strikes are out of the money. And so I'm actually giving myself a cushion on all those trades so that if this does go up, I don't get run. I'm not going to get run over unless it really blows up and goes to like 150, then I'm going to get run over. But either way, if that happens, I'm getting run over no matter what I do, unless I'm long. So, but if you want to be long, do the same thing on the other side with Oklo. So instead of, selling the out of money calls, or out of the money calls, sell the out of money puts because you're getting the same amount of money, right? Because the volatility is high. And if I was going to be bullish on this, I would stick around the 90 strike. 90 or 85. And the reason is because, look, the delta is about where I'd like it to be when I'm selling. You got a 23 delta on the 90s. The 85 is a little more attractive because there's a lot more open interest there. And the 80, really interesting because there's 3,000 contracts there. And then same thing here, I would do a put ratio. So instead of doing the call ratio, I would do the put ratio, and I would do the 90 once and the 85s twice. And if you look, this is almost exactly like the call ratio, but it's on the other side, right? Buying power is almost the same. Max loss, max profit is almost the same. Probability of profit is about the same. And you're bringing in about the same amount of money. And as far as the curve, it looks exactly the same, but the opposite, right? So instead of being protected to the downside, I'm protected down here, right? So this thing can fall all the way down to almost 77.5, $80, and I'm still good on this. And same thing with the call. I can go and go out and buy like a 70 option here, cover this. And if you notice, my buying power basically vanished. Now it's only $800. Still got almost an 80% probability of profit on this. I'm getting about 6 deltas long, it's almost like being 6 shares or so. And this is a risk-defined trade. So if you can't do uncovered options, this is the way to risk-define. Again, it's a broken wing put butterfly, if you want to be technical about it. So you have, that, and then, look, you can just go and sell the 85.75 as well. All right, so there's, and then if you really want to get crazy about it, you could literally do both of these trades, right? So say you want to do both of them, you want to play both sides, you do the 85.75, you do the 135, 140, and guess what? Or 145, and guess what? What do you have? You got an iron condor right there for yourself. Now that's an iron condor. Now you don't have really much probability of profit here. It's about 50-50. But you're playing both sides. And if you look at this one on the curve, this one, you're looking to kind of have this thing land. I hate when this does this. This is wrong, by the way. Just this. But you're looking for this thing to land. This thing just didn't. There it goes. It just refreshed. You're looking for this thing to land in between here. And look, you got downside to almost, about 82, call it 82.5, all the way up to about 142.5. All right, you don't use that much buying power, but this one's more, you're looking for this thing to land in the middle. And so you could do both. as one trade. So again, you can slice and dice these things however you want. So there, I kind of beat the death out of Oklo, but I feel like I need to beat the death out of it because I'm pissed off that it got my money yesterday. But hey, what are you going to do? That's the way life is. So there you go. So 3 different trades, right? The call spread, 3 types of trades. Ah, God, what did I just do? I just hit the number. I just hit the, yeah, I just hit that. That's not going to do anything now anyway. I just sent the trade in. So 3 different types of trades. And you can do those right on Tasty right up here. It was a call ratio. It was a put ratio. And then we made the call ratio a butterfly. We made the put ratio a butterfly. Then we did the call credit spread and then put credit spread. And then we did kind of combination of both, did an iron condor. So we hit all the food groups, man. I think the only thing we didn't do is probably like a covered call, but everybody pretty much knows what the hell that is. But so we hit all the food groups on this one, pretty much other than a calendar spread or a double diagonal. So a lot to digest there on Oklo, and I'm done beating that one up. So the other one that I wanted to look at today was Baba. I saw Baba was in the news. And so let's take a look at Baba. Baba. Baba getting a bit of a gap up today. It looks like it's up about $6. Not great volatility though in Baba. In fact, it's like non-existent, and it's pretty much running right at its average. And so why am I even looking at that? Because, look, anytime you're looking for an options trade, you pretty much have a 50-50 decision to make. Am I a seller or am I a buyer of options? And that's anytime you're kind of looking for a trade of any type, you got to say to yourself, am I a buyer or am I a seller? Well, if you're going to be a seller, volatility's got to be high. And not just high relative to everything else. It needs to be high relative to the stock's average volatility. And in case of Baba here, 32 is pretty average for this. And so I know right off the bat, I'm not going to be selling options because I'm just not going to have any, there's not going to be any premium to sell. So I'm going to probably be a buyer in here of options. And then looking at the chart, you know, am I a buyer and am I bullish? Am I a buyer and am I bearish? And the contrarian in me is saying that, look, the trend overall on Baba, and on, you know, like many of the Chinese stocks in general, has been down. You know, it's had its moments where it's made some pushes up, similar to this. But anyway, let's take a look. So I'm probably more apt to do some calls in here. And what I usually like to do in this case with a stock like Baba is I'd like to go in the money, right? So in the money is going to be options that are actually lower than the current price. Hold on, give me a sip of coffee. Options that are lower than the current price. And usually where I like to sit is I like to sit between the 60 and 70 delta. And that's this number here. And what is the delta? It's basically how much it equals one share of stock. And so at a 150 or 155, we're sitting at about 66 deltas, which means it's like getting, if you had 100 shares of stock, it's like getting 60. It's like getting 66 shares instead of 100. And it's the number at how closely it trades to 1, right? Obviously, if you go all the way up to 1, it's going to trade 1 for 1 with the stock. I mean, it's not, there's other things that like gamma and all this other stuff that impact that price and theta. But just for simplicity, that's really all it is. And so I usually like to sit around 66, 70 to 60. So in this case, I'll probably do the one. Now, these are not going to be priced because it's pre-open. Stock's up like $6. And so all these option prices are not going to be current. But in this case, what I'd like to do is I'd probably buy the January and sell the December. All right, you can see that one's going to run me about only $245. And why am I doing a calendar spread? Because it's basically a delta neutral trade, even though the delta on this is like barely negative. In a sense, I'm kind of selling, in a way, short-term volatility on this while buying a little bit long-term growth, right? Because I'm looking for it to go up. I just don't want it to go up fast, and I don't want it to go up. I don't want to go up too fast because if it does, I'm going to be screwed. But if it does, I can manage this, right? So come December, I can actually start rolling this call out, right? So I already own the 155 in January. When December comes up, I can roll this, right? And by rolling this, I'm going to roll it out to a higher strike. And what? I'm going to bring in more I'm going to bring in premium while still being long in January, right? So if this continues to go up, I'm rolling that call out. I'm getting money from premium, rolling that out. And if the price of the stock is going up, I'm actually making money on this, right? So that's why I'm doing calendar spread as opposed to just like a standard call spread, right? So buy the January, sell the December. And so that's what I like to do today for Baba. So that's what I'm looking to do. So it's going to be the 155 calendar spread. And at the time this opens, the delta on the 155 should be probably be about 73 or 74. I'm usually pretty good on those predictions. So it's going to be about, it's not going to be quite 76, but it'll probably be about 73 or 74. All right, so that's what I'm going to do on Baba. Simple calendar spread. Jan Dees. Right, so you're going to go sell December, buy January. It's going to run you $245. It's going to run you basically, $2.45. It likely will be around this price anyway, because as the price of this goes up, right, the prices of these will likely go up the same, maybe a little different. So might be a little off, might be more like maybe $2.50, but it's not going to move that much with that $6 move. All right. So there's Baba. Now, you could very well just go and buy a call spread. If I was going to go out and just buy the call spread today, especially after it's up like this, I would probably do like a 160, 165. And I would do it in January. I would not do it in December. I would give yourself more time. Problem with December right now is it's under, like I usually like to go out at least 45 days, especially when I buy stuff. I like to give myself time. Shorter term, you have that theta to kind of worry about, and you don't want that. especially if you're taking a directional bias, unless you know something's going to happen in the next, couple of weeks, which most people don't. I always like to give myself time. So especially with option trades, when you buy, right? Theta is not your friend when you buy, but theta is your friend when you sell. So usually when I buy, I like to be out in time. And with these, I have 64 days. If I go with an earlier expiration, which would be, these are going to go to the weeklies, which is the December. I only got 36 days. So, and I don't really like that time frame. So anyway, either one you want to do is fine. But again, synthetically kind of leaning long bias in BABA. And looking at it, BABA has been, that's Oklo. Oklo keeps coming to haunt me, man. But BABA has had its challenges. But if I were to look at this and say, technically speaking, this thing's got a good shot to run up to 180 from 164. Just depending on, basically where it's at. And if this pattern overall, if you want to kind of throw some technicals in the mix, although I'm not really a true technical trader. I mean, you could say there was some semblance of a bottom here, right? Even short term, possibly a double bottom right here, touch, rally, back. Is this the next leg up? First stop here is probably going to be about 170, right? Which is these swing highs. You also have this high volume node up here at 174. That's likely. That likely may be some gravity. Plus, you got this gap to fill, right? You got all these buzzwords now that I could throw out here based on this trade that, will make technicians mouth water. High volume. No, there's what's the other one? There's I don't know. What's the new term now for order block? There's an order block. There's an order block. Anyway, whatever. Who cares? I'm an options trader. So anyway, this is all kind of mental masturbation when you start looking at charts like this. Look, there was a bottom here. The thing's been beat up quite a bit. It hasn't really it's running today. Get long, buy some options, see how it goes. Give it a shot, right? It's $200. It's not going to break your account. You spend $250 going out to dinner nowadays on mediocre food that some influencer said was to die for. Oh, it was fire. Yeah, it's like, no, it wasn't fire. It was the same Cisco crap that they serve at Chili's. They just happened to hit it with a blowtorch or something. It's like, come on, stop. So anyway, those are two there today with BABA. And then I'm going to look at Cisco. I kind of don't want to look at Cisco, but I kind of feel like I have to. Huge run up here today. And, I'm overall generally a contrarian. And the thing about Cisco, though, it just hasn't been, it's had my number quite a bit. But you have good volatility in here. And it's actually historically high. You've had this big, huge run up today. So with Cisco, like with what I did with Oklo, and the nice thing about Cisco though is it's not a meme stock. This thing trades some volume. So I mean, at least I have that going for me. So I'm going to try and do the same thing that I did with Oklo, and I'm likely going to go out here in November, and I'm going to probably try and sell either the 80s or the 85 calls. Now, they're not priced very well now, but with this thing gapping up the way this has today, likely these are going to be well over. These things might even be close to $2 with the volatility. in here. So, so I'm going to be looking to sell either the 80s or the 85s. And it likely will be the 80s. And so I'm going to sell those calls. I'm going to do it probably naked. And then hopefully look for this thing to not only get a volatility collapse, but also, you know, even maybe it breaches my 80, but I'm going to wait a little longer with this one. Probably going to wait till like 10 o'clock and look for the 10:30 reversal. But that's what I'm looking to do today on Cisco for a day trade. I don't think you're going to be able to do a spread. I don't think you're really going to get enough money. If you did like a 80, 85 or 80, 90 call spread, I just don't think you're going to get enough money to do it. You're going to have to do these options naked, and likely I would assume the margins in here kind of suck. Yeah, they do kind of suck. I mean, they're not horrible, but they do suck a little bit. But 1,500, and I'd probably do it a couple times. So anyway, sell the 80 or the 85. I like the 80s. I'll probably stick to the 80s because it's closer to the money and I'll get better movement on them. And try and do that for a day trade on a fade on Cisco, and try and take advantage of kind of retail piling into this thing after the fact. But I don't know if there's going to be too much retail because I don't really see Cisco being something that a lot of people are chasing right now anyway. If it was like NVIDIA or Apple or somebody, I could probably see more, you know, I could see probably a little more hysteria trying to catch on to this thing, but likely you're not going to get that. So that's kind of what I'm looking to do here in Cisco. And I think that's a wrap. Yeah, it's 7:45. I don't really have much of anything else. I could talk about some of the knucklehead things. What did I do? I talked about the Oklo yesterday. I did the HUD 8 trade. That one's kind of gone against me a little bit. I talked about that one yesterday, so there that one is. That's in there. I do what I say. I say what I do, and I do what I say because I got nothing, absolutely nothing to hide from anybody. Datadog, I'm in those trades. They're not working out as good as I had thought, but nonetheless, I'm in the calendar spread, and I'm also in this vertical spread, put spread. That I'm long. That actually backed off quite a bit. And so, these trades will eventually work out in time. So I'm in that one. So that one's in there. And what else? I did the CCJ ratio. I'm in the 75-80 ratio in January. And the SMR trade. And right now, that was another ratio. That was a call ratio. And this one came in really nice so far, was the SMR ratio. And I think that was all I did yesterday, besides my Oklo debacle. And then you could see what I always love to show everybody, is I love to order all my stuff from worst to best, and you can see I have a ton of losers, man. I've got a ton. They all don't work out. They're not all 10, son. As one actor famously said, they're not all. And so I love to do that and show, like, look, I've got quite a few foul balls in here. And, I have to say one of the biggest foul balls right now is Oracle. I kind of keep looking for this thing to find its legs, and it ain't. It ain't. Meta, same thing, and Tesla, as well. That's also I did the Marvel trade. I did that Marvel trade as well, and that's a put spread. But anyway, yeah. But I got some decent winners too, though, right? And it's about half and half. and you got the ones in the middle that are kind of like grinding away here. And I have a bunch of others that possibly got away and that may not come back. So overall, you win some, you lose some. And you hang on to the winners and you cut your losers. So there you have it. So that's all I got today. Don't really have anything else. We've got these numbers coming out at 8:30. I'm going to sit on my hands through it. I don't really find these events very fun to trade. It's always best to kind of just let the news come out, let the market digest it, and then, kind of see if you can take a position from there. I'm still looking at those two spots, though. I mean, the big ones here is going to be 6,900 and, down here at 68. We'll call it 68.20, between 68.30 and 68.25. I'm going to be looking for a possible long if we get down there. That's a decent move, though, if we get down there. That would be a little bit of that would be a pretty big move today. But anything's possible. All right. So that's it. That's all I got. And nobody is actually watching at all. All right. So have a good one, and I will be back